Well, hello everyone. This is Roger Scott. I'm the senior trader for Wealth Press. Today is May 8th. It's a Friday, and what do I always say? Let's get into it right now. Let's start with the news, and then we'll see what the employment numbers are. I wanted to wait specifically till after they came out. So, global shares rose Friday ahead of the U.S. report that's expected to show 21 million jobs were lost in April. We're going to find out right now what that number was. Hopes are rising for another round of relief from stricken America businesses, even as the recession deepens. Analysts expect the U.S. government report to show the worst set of job numbers since record keeping began in 1940. Folks, I'm going to read this again. Analysts expect the U.S. government to report the worst set of job numbers since record keeping began in 1948. I didn't think I was going to read that. With the unemployment rate for April perhaps reaching, 16% or more. 21 million jobs are lost as expected. That would mean nearly all the growth in the last 11 years since the Great Recession would have vanished in 1 month. That's amazing. Chinese state media report says the top trade negotiations for Beijing and Washington held a phone conversation and agreed on cooperation. That's probably a smart idea for now, on economic and public health issues and working to implement a trade deal. Helped soothe concerns over the friction is building between the two biggest economies. I'm going to say this right now. I don't think this is a great time to negotiate trade war when we're having the worst economic crisis in 11 years. Or actually, no, since 1948, since we've been keeping records. That's a quote for a decade right there. Investors are cautiously looking ahead to data expected next week, including those that gauge economic growth in Great Britain, China, and Malaysia. Major Japanese companies have begun reporting their financial results, including Toyota, Honda, Sony. So we're going to get to see exactly what Chinese is up to. But now, let's look at the data. I've been waiting a long time for this. And here are the numbers. The U.S. economy shed a record 20.5 million jobs. Let's see, what was the expectations? Let's see here. Let's go back. They were expecting 21 million jobs and 16% unemployment. The number came in at 14.7% and 20.5 million. So pretty close, right? Not that far away from what we were expecting. So the big pictures, 3.2 million Americans filed for unemployment last week, swelling the total number of jobless claims to roughly 33.5 million in the past 7 weeks. Last week's numbers are the lowest level of claims since the crisis began, which is very positive. They topped out at 6.9 million during its second week. So that's very, very, very positive. Now, let's take a look at how the futures are reacting in light of that. The market was up about 200 points on the Dow. Hasn't changed much. I guess the numbers were fairly in line with expectations. So no major surprise there. Now, let me tell you what I'm really surprised about this week. What I'm really surprised is earnings. And let me tell you the why. Look at the NASDAQ 100. It's above the 50-day moving average. It's above the 200-day moving average. It's actually filling in this gap, which is right before making new highs. And let me tell you why I believe this is the case. This is the case because tech is strongly outperforming the broad market. Tech profitability has held up a lot better. First quarter earnings for tech were 6.1% better than expected on 4.5% better revenue from a year earlier. An above average proportion of tech companies have beaten first quarter estimates for revenue and earnings. For the S&P as a whole, numbers are not as good. We've got 353 members come out as of yesterday, and we're down about 13% on 0.5% better revenue. So tech, 6.5% better. S&P 500, 13% worse. 6% better, 13% worse. The impact of that, let me show you right now. As you can see here, we're below the 200-day moving average. We haven't gotten above anywhere near that same level that we're seeing on the NASDAQ. So to me, the biggest surprise is how well everything is keeping up, how well price is maintaining current levels. To be honest with you, if you told me a month ago that the Nasdaq was going to come here and start filling this gap, which broke us down to begin with, I would say that you need to go to the mental hospital. So again, I am amazed. To say that I'm impressed is an understatement. I am amazed at how well the tech sector is holding up. The tech sector is officially bullish right now. I mean, it's unreal. So folks, everyone post quarantine is going to start spending money. That's right. It's happening. It's already happening in China, and it's going to happen here. Thankfully, consumers are spending money in record numbers. This $2.2 trillion stimulus is going fast, and you could make fast, easy cash if you know who to stance to make profit the most. Lucky for you, I've predicted which stocks are set to skyrocket due to this influx of retail capital. That's right. There's no mystery here. You're going to learn all about it. Don't wait to cash in on this unprecedented wave of post-quarantine spending. Folks, get in on it now. Things are reversing right now. Click the link below. Follow the button at the end of this video. Get in on this now. There is a rush of accumulation. People have been sitting on the sidelines. They're going to start spending their money. Get in on it. There's a specific sector that's going through the roof. Get in on it. You could make fast, easy cash, but you got to know where to go. This video is going to help you do it. Follow the link below or hit the button at the end of this video. I'll talk to you guys later and have a great weekend.